MFSL joining us. NBFCs borrow from the market, and so the rise in market yields could impact them. Ravi, good morning. What's your sense? We saw this big fall in bond prices, rise in yields. Even CPs went up by about 30 basis points. Correct. Will 2017 mean slightly more expensive money than last year?
Yeah. See, I will divide the 2017 from this point, from this moment as we see it, in two parts. One, the part which is before 31st March 2017, the part which is later to from 1st April 2017. So before the 2017 March, normally there is an year-end tightness which will prevail according to us. And second thing is that there is this cash limit, withdrawal limit has been relaxed by Reserve Bank of India, and then the totally limit has been done away with in a very short while from now, short time from now. And the third thing is that, of course, that expectation of 25 basis point cut, as some colleague was mentioning, did not materialize. And the fourth one is that, of course, Fed yield is constantly going up. Now it's there 2.4, 2.5, closing, touching that. So these 3-4 reasons put together, we see that there's going to be a situation that the money would be somewhat tighter till 31st March. One can probably reasonably expect that. 20-25 basis, as you correctly said yesterday, the short-term market has already reacted by about 20-25 basis point.
But you expect cost of money to fall after April 1st?
I would probably think that, but why I'm saying that there is a reason. There is still, the credit offtake is still not picking up. See, the one is that this is a more from the supply-driven situation. It is a supply-driven situation rather than a demand situation.
No, I take your point, Ravi, but if you can just tell us how much the cost of money might rise in terms of basis point. I mean, will they be 0.5% costlier in 2017, 0.25% costlier?
I would say that the 25 basis point, we will see this kind of a rate jump, which has happened before March, 25-30 basis point, may probably come off a bit in April, May, which is a traditionally weaker month. And if probably they may again go back to those 25-30 basis point, what has come down in April, May kind of situation. So I overall, my forecast is, or my prognosis is that unless credit demand picks up substantially, I am not expecting any sharp spike in interest rates.
Okay. All right, we'll leave it at that. Thank you very much, Ravi, for joining us. Anant Narayan of